Hello, trader. Welcome back to proof that trading, that the market is not chaos. Today we are going to be again going to the Forex calendar. We're going to see that today there is essentially the most important in general, the most important event, the federal funds rate. This is actually something that's super impactful on the economy. So let's take a look. Let's get to know a little bit about this essential event and what this means for us. Going to any Forex calendar like forexfactory.com, we are making sure that you have the right kind of time, right? It's 8:46 in my time, and we see that at 9 o'clock, 9 p.m., or in approximately 14 minutes, the United States is going to release their federal funds rate, or FOMC. There's also FOMC statement. Now, the reason why this is so important, everything that we look at on the monthly basis through all of the macro statistics, if we're talking about let's actually kind of filter out maybe all of the other countries other than the United States. There we go. And we apply filters. So all of these things, right, throughout the month, all of these scheduled events, these macro statistics, they're the ones that lead to a decision from the central bank to raise or lower interest rates. This is something that's done, kind of like at a point, 0.25 or a quarter of a percent at a time, unless there's something drastic. If the statistics here, the unemployment, the NFPs, the CPIs, if, all of these things show that the inflation is rising very quickly, the government, the central bank, will raise interest rates. This is actually kind of important because if you are a citizen of America, most Americans, they buy things in credit. I mean, there's store credit for like jewelry stores, there's store credit for clothing stores, there's bank credit. I mean, there's a lot. It's easiest thing in America to get a credit. But also as a financially responsible citizen, an American will probably think twice opening a credit line on something that has like 20% interest rate. This is kind of like a financial suicide, pretty much. So, having said that, when the central bank raises interest rates, it actually constricts the economy from within because people there are not quite as eager to borrow money from the bank and spend it as well. Right? So when you borrow money, it's not like something that you borrow money from the bank and you stuff it in the mattress and you wait, for a while. You borrow money with a particular intent to spend it. And this is something that when you spend money, you stimulate the economical growth. Now, let's kind of take it as an example. Imagine that you are a bakery owner and you realize that you're constantly selling out your product, right? Cakes, pastries, bread, and you realize that your customers, there's some customers that are leaving without having their needs satisfied. So obviously, as a good business owner, you're going to think about expanding your business. So you're going to go to the bank, you're going to borrow money, and say, hey, give me $1 million. You're going to say, sure, here's $1 million. You're going to pay back 1,200,000 in like 2 years or 3 years, whatever it is. And that might seem like it's an appropriate kind of exchange. So having said that, if that's if the case is like kind of reversed, if you're, actually with that money, what are you going to do? You're going to hire more chefs, right? A pastry chef or, some sort of chef, some sort of more staff. You're going to hire maybe an HR personnel to find you these specialists. You're going to look at real estate agents that are going to find you a bigger place. You're going to contact the factories to produce better equipment, these things. So all of this is something that you're going to pay for, and this is actually something that they're going to feel effect as well. They're going to feel the demand for their services or goods rise, and they're going to also kind of go in line and hire more specialists, buy more raw materials. So this is something that trickles down. The spending of money trickles down. And essentially you will also do as an owner of a business, you'll probably charge just a little bit more for your product, for the cakes, the pastries, the bread, just a little bit more. You charged $1 for a pastry, you charge now $1.03. It's not something that's going to push away your clientele, but it's something that's going to allow you to pay back your loans a little bit quicker. And that's essentially what inflation is. All right, and inflation can rise significantly faster than the salaries. And the government doesn't want that. They don't want your salary to be like $500 a week and a piece of bread costing 50 bucks. So essentially what they do is they raise interest rates, and then you go to the bank and you say, hey, I need $1 million. And they're going to say, sure, we'll give you $1 million, but in 5 years you have to pay back $2 million. Whoa, that's a little bit too aggressive, and that means that you might think of other ways of making money, for example, or gathering in 4.5% is forecasted, and 4.5% is probably what it's going to be. If there's going to be a surprise, like there's going to be 4.25, 4.25, that's something that's going to be a surprise. And essentially, if the interest rates are lowered, the international interest in the dollar falls, the demand falls, the essentially supply is going to be kind of still there. If it falls, it means people are selling. But if it falls, essentially it means that the dollar will lose strength. It will devalue. But if the interest rates are going to be higher, this is also something that's going to attract international interest into buying the USD. And essentially what this will do is will create a positive movement. So there are two ways that we can take advantage of this. Um, well, we're going to do the pending trades again by the asset price, right? But this is going to be done a little bit closer to the actual time. So let's kind of take a look. There we go. We got 3 minutes and 30 seconds. Nobody here is in chats yet. I do actually encourage you guys to kind of touch base. Let us know what kind of content is of interest, whether it's just technical analysis with regards to some indicators, or if it's about some, I don't know, conceptualization of fundamental analysis, any kind of topics that are of interest about trading. Do touch base. Obviously, a subscription and comments are always welcome. There is a link to the pocket option to our platform, our favorite platform, that's going to allow you to get a little bit extra advantages with regards to depth bonus. Anyways, if you have any kind of questions, if you want to actually trade with me one-on-one, do reach out. The Telegram channel is also listed in the videos. Reach out. Let me explain it to any kind of thoughts that you have based on logic, math, statistics. This is something that we burn with, this passion that we have about trading. We all share it. Let's kind of like maybe get together, see if we can start a community and where everybody's respected and essentially we help each other out. So in 2 minutes, there we go. So actually, as I mentioned, there's nobody in chats at the moment. But in approximately, let's kind of count down to, there we go, and there we go, less than 2 minutes. So we got 56 seconds, there we go, until the end of this candle. And on the following candle, there should be already, at the end of the following candle, there should be a spike. So the retracement amount, the retracement is always present in these kind of events. This is not something that's a surprise. I'm not the only one who's going to be looking at this right now. There's actually quite a lot of international attention. Well, as I mentioned, we're going to set up maybe something a little bit safe for the pending trades. This is the current value of euro dollar in the real market. And we're probably going to do like 4 pips higher, 4 pips lower for buy and sell. There we go. Actually, there we go. Move it a bit like this. All right, so here we go. And there we go. At the end of this minute, there should be a an impulse. The thing is that, as I mentioned, it's not a surprise, so it's not going to be like 100 pips. But it could be like, 30, 40, 50 pips. So let's take a look at this together. As I mentioned, approximately like 20 seconds from the release, I'm going to open a pending buy and a pending sell order. There we go. Okay, so we're approaching this, and after a spike, I'm going to open the position for a retracement for just 1 minute. There it is. All right, so here we go. We got 4. So let's do 3 8 or 8 0. Wait a second. What is it? 3 4 3 8 for a buy. Oh no! All right. Anyways, I kind of missed it. There's some volatility. We see it. There is a spike. There it is. Let's maybe open it for a retracement. Let's go to second step martingale very quickly because it seems like there is a bit of indecisiveness. All right, we have an open trade. There we go for $100. As I mentioned, this is kind of weird. There we go. It's still all over the place. So there was a spike. Let's see if it's still pending. Yeah, it is 450, so it's not a surprise. So there was a bit of a spike. There is a bit of a retracement. I think that we're going to just cash in on the retracement. And yeah, there we go. As I mentioned, I did this just for a 60-second pull. So there was a spike. I mean, right now, the fact that the euro is going down, people are essentially showing that this is a good thing for the dollar. It is the dollar right now, the secondary currency that's moving this particular asset, euro dollar, and well, that's essentially what we see. There was a spike, there was a retracement, we made some money. Retracement is always going to happen. Why? I kind of went through this quite a lot. There is going to be a retracement because when somebody opens a position here, they're made some money here already and they're selling. They're closing the position. When you close the position, it's actually a sell. And I'm actually looking at something that's quite interesting. Wow, you know what? I think I'm going to take another another position because of that kind of movement. Well, usually could imply something else, right? So, I mean, this was big. This was much bigger than the actual impulse. So spike, retracement, we made some money here, but now maybe some banks, mutual, for funds, the big money. Let's actually take maybe, there we go, another $200 position. I'm thinking that I'm actually want to retrace, but this is actually something that's unusual. I really can't really say right now what would be driving euro upwards. There was a bit of indecision in the beginning, but I think that maybe till the end of the minute I would want to take a position. Alright, let's take a look. Alright, so this was a losing position, but there we go. It's still retracing. And in another 13 or so seconds, this candle is going to close. Maybe we should turn on some indicators to see what is going on. We do have a relatively decent resistance and support level that I still think that... Yeah, well, parabolic right here says that it's going to go higher. I do believe, though, that it should retrace a little bit, and we can choose the next minute. So let's just kind of stick with this for a little bit. Maybe we can actually, trust the parabolic. This was for 2 minutes, huh? So we can trust the parabolic, it says that it's going to go up, but this is something, any indicator, this is something that's doing a calculation based on current quotes and the previous quotes, while the market is actually moving based on our decisions, the traders. Right, so there was kind of like an expanding pattern here. All right, so we lost 100. All right, we lost. All right, so we might lose 200. So the next position, if we're going to kind of cover this over, would have to be somewhere around 500. All right, at 82% return on investment, this is something that, yeah. As I mentioned, I still think that it is going to go up because there was a reason after this kind of minuscule retracement why it spiked and went so high, so aggressively, and it wasn't really because of technical analysis. Right, so maybe something in the statement that was released as well, people reacted to the numbers as maybe being a good thing, but something in the statement could have shed some light on this, and that's why the dollar started going down, pushing the euro upwards. So it looks like, there we go, yeah, it looks like based on our quick little analysis, we've gotten a little extra money. So we've made $81 on the retracement, and it looks like we lost 100, but we made 164. So we got our 100 back and 64 in profit. So I'm like 150 bucks in the lead in a matter of a couple of minutes. And that's essentially what's important. There's never really a guarantee with, if you guys spend a little time with me and, our team, when we show you these videos, with time, over and over, I will create this content that will prove to you market is not chaos and based on logic, math, statistics, historical statistics. We are able to determine certain aspects of the movement, even in the real market, and we're able to take advantage of it. So once again, my dear friends, I hope that you guys will leave comments, subscribe if you sign up through the links to this great platform where you can make money very fast. We're certainly going to be behind you with any kind of assistance that you might need. So touch base, leave a comment, subscribe, reach out to me one-on-one. I will make sure that you guys understand everything and make money in a steady, safer fashion. Thank you so much, my dear friends. Again, I want to see you guys next time.